Hi everyone, back with charting video number 3. This one is completely new territory for me. It is Ripple or XRP. In the past I've only done Bitcoin and TAO, TAO. Those are the two that have been pretty consistent. They react the way they expect, but I have added Ripple, Link, Cardano and Solana into the watch list, and I will be charting those up just to see how they react. It'll be good to have a few more opportunities for entry. If not, it doesn't matter. I'd rather have a couple of options that are good, solid options rather than 100 entries that are not really valid. So this video, I'll be charting it up. Hopefully it's something that I can utilize in the future and place a few trades on. And then in the next few videos, I'll do Link, Cardano and Solana. But as always, we're starting on the daily time frame. This is how to chart. This is how to chart the charts up. Initially, after this one, we've got the larger time frames. That the price won't go near the trend lines for quite a while. That's when we'd be looking at just doing the 1 hours or the 15 minutes each session. But always start on the daily. It'll give you more of an idea of the overall trend of the product and what we'd be looking at long term, and then we can take the shorter term positions in the meantime. I said all that, but in this case it actually does look like on the longer term we might actually be pretty close to the current price. So I'm going to start with a high, bring it down, and we're looking for touches. So we can see that I've put it a little bit above, a little bit below this wick, but that's because we want to get the most amount of touches as we can. So we've got a few here, and that sort of improves the validity. If we can see that it's come up, touch it and had a reaction, in this case a huge reaction, which I'd probably ignore that. It's probably to do with a whale selling off or something like that. It's dropped down because of a huge sell order, been brought back up by buyers down in this area, realizing that it might be a bargain at that time. But along this trend line, we've got a few touches here, one there. Might bring it down a little bit lower to make these touches actually touch. And I'll quickly have a look by putting it on this one if it really changes anything. Kind of. Yeah, so I've just changed it from this wick here to this wick here, and we can see that now not only are these wicks touching, but it's actually hit the top of this wick. Now on the daily time frames, each of these candles being a whole day, so you can see it's like perfectly touching now, whereas before it was like up here somewhere. Now each of these candles is a whole day, so even though we're calling these wicks, especially with these might actually be closer to the actual close and open of a candle when we go to lower time frames. So that's pretty straightforward. We've hit a few tips of the candles along this way. That gives validity to that trend line, and along the bottom we can kind of see that it looks like it's kind of bottomed out. Now this is actually in a pretty interesting position, so I'll zoom this a bit. So I've put it from the bottom of this candle, hit a couple there, like one there, one there. Now I'm going to actually move that up so we're actually touching more than just that one tip. And looking at this, now we've got touch, 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 with each time having a upward reaction. So that gives validity to that trend line. It does seem in an interesting spot because it's actually gone above that longer time frame trend line for the downtrend, and I would actually be looking at this going into an uptrend possibly. Now having a look at the overall look of the coin, doesn't look too promising. Maybe this is something that isn't being used anymore. I'm not sure of the history of this coin. It's probably something worth looking up. But in terms of just the charting, it has gone above the downtrend by quite a bit. Like we can see here, it's wicked above and come back down, but this has had multiple closes above that downward trend line. It has traveled along this support line. I would be looking at entries along here, or what is normally very common is for something to go above the trend line, come back down to retest the trend line, and that's where it will have the main reaction. So at the moment, it's broken above, but it's just traveling along. We could get an entry for a long along here, like a buy order. But if it was to come down and retest, we'd be looking at a big reaction to get a lot bigger, like a lot bigger reaction for the buy order. Now, this is all still on the daily. The next one I'd go to is the 4 hour. And now that looks a bit better, doesn't it? I'm just going to go back to make sure we can see that this trend line is valid. These candles along here, yep, a lot of wicks have touched it and had a reaction back down. This one here, we can see there was a lot of buy pressure all the way up here, especially in these two candles, but it's come up. Looks like it's tried to go above, but it keeps getting brought up and down. And then when it's finally settled below it, it's had a big reaction down. Traveled along the 200-day average for a while. And now we'll be looking at, like, okay, so honestly, I would be looking at doing trend lines for the 4 hour in where we are now. I'm just going to try to zoom in there to see if these are just wicks. I'll have a look at this one when we go into the 1 hour, because it'd be interesting if that was just a wick above and if the actual trend line's closer to this here. But I don't know, it looks pretty valid in this time here because it's traveled along this bottom support, broken above the daily downward trend, and it's traveled within this triangle. It's hit the top, come back down, hit the top. It has broken above. You can see a huge buy order, but the fact that it's had so much selling pressure above continues to make this valid. So I would actually be looking at this traveling within this triangle and then looking at a breakout. So with the breakout, I sort of mentioned it down here, but if it does go outside of this, come back down and retest it, and we can see that there's a reaction, there's a good chance that if it goes above, comes back down, has a reaction, then it should go up pretty dramatically. Same thing on the opposite. If it breaks below, closes below, it comes back up and retests the outside of it, it could have a strong reaction going downwards. But then because we've got this daily line, we'll be looking at other reactions here. So if it does break out on the top, come down and retest, there's not really much stopping it. There's no real structure that's going to give resistance. So we'd see what happens there and then sort of watch for it to create new structure. Whereas if it breaks down on the downside, we could kind of see if it's going to react. So if it comes back down, it could touch that, go back up, touch that, and then sort of travel below between these trend lines from there. And while we look for a reaction on the upside, if it reacts on the downside of that, I'd say it's going to be pretty bad for the coin, to be honest. It's going to be, yeah, there's no more support for a long time. This is where we could get into Fibonacci retracements to sort of predict where it could go. And I might do that at the end of the video actually. But for now, let's just zoom into the 1 hour and then we'll do the 15 minute. So that line still looks pretty fine. It could be dropped a little bit lower in this area, higher for that area, keeping the average perfectly fine. And it is more valid on the longer time frames as well. So we're not going to be modifying it too much for the little 15-minute ones, because at the end of the day, 15 minutes is a good way to find an entry, but it's not where we're going to be drawing the most valid lines. Now it's come down, gone back up, come back down, gone back up. It looks like this is a valid line. Would have been good to get an entry there, but that's not the purpose of these videos. What I will show is what I would do in this case. I would be putting a line there and adding an alert, and exactly the same thing there. So the purpose of these is so I get an alert before it actually hits the trend line. So in this case, these are set up, these alerts are set up. Like I've said in all the other videos, I can go to the gym, I can go see friends, I can go do whatever I need to do. And at some point, I'll just get an alert on the phone that says it's either crossing this line or crossing this line. And that way I can open up the charts, and it's going to give me enough time to have a look at what's going on to determine if there's a good entry there before I place the order. I'm not going to be doing it on reaction. Like if it was alerting me on this line and I'm like, oh no, I've got to hit it before it has a strong reaction, I'll get at least a little bit of time to see what the overall chart looks like and whether there's a good entry for a short in this case, or a long in this case, or if it looks like it's going to continue on the downside or the upside. But I would be surprised if it doesn't travel along this triangle a bit further before it does break out. If we go to the 15-minute, sometimes this gives a bit more structure for shorter term trades. Now, if there was something on the upside here, like it could give opportunities for shorter time frame trades, but you would only ever use the 15-minute chart for those short time frame trades. I'm going to delete those because what we can see on the longer time frames, it's already at the point where it's going to have reactions. So the 15-minute one's good if it was in like the middle area, if we're looking at just shorter time frame trades while we wait for the larger ones. But in this case, I just deleted those lines. They're not really as valid when we're comparing 15-minute lines to 4-hour or daily. The reaction is going to be off the longer time frame ones. So in this case, I'd leave it. If it does go up and start to have retracements around this area on the way up, it's likely to go like make those zigzag patterns, or even if it spikes up and makes a flag, that's when we could draw the new flag pattern on those structures. But at the moment, I wouldn't worry about it. The main reaction is going to be off this bottom line here. So I did mention before that the Fibonacci retracements could be a good way to see where the resistance would be if it does break out on the upside. It's gone above this downward trend line. If it does have a big reaction back to the upside, this is how I would expect to find it. So with the Fibonacci, we're going to go from the high down to the low, and the sell area, you'd be looking for opportunities between the 0.5 and the 618. So this is the 0.5, the green line. This is a 618. The 618 is like the golden ratio. That's why I've got it in yellow. I'd be looking at, because it's not the strongest coin and because it would be a huge reaction in the first place, I would be looking at opportunities from the 0.5. So as soon as it gets to that 0.5 area, I'd start looking at opportunities for a sell, for a short within this area. If it does get to the 618, then yeah, maybe it's going to have a bit stronger reaction. But the other thing that you could do is put a partial order at the 0.5 or anywhere in between, and then the other half of the order at the 618. So that way, if it goes in there, you put half the order for a short when you see a opportunity for it, and if it comes back down, you know, awesome, you've got a good trade, even though it's only half a parcel. But if you put half and then the other half once it hits the 618, then you've entered in with your full trade amount, whatever that normally is. I normally go for 3% of my account per trade, or to have 3% of my account open in trades at any one time. So if you do half when you see a reaction in the middle and the other half at the 618, if it does have reaction, then perfect. You've got your full parcel in a trade. But yeah, if not, if it goes in the middle and comes back down, at least you've got something in there. Some profit is always going to be better than no profit. And there is another version of the Fibonacci retracement where instead of just going from the lows to the highs, the highs to the lows or vice versa, it actually goes by the trend. So now I'm going to actually delete this now that I've got that marked up. Now on this one, would go from the low to the high and then to the low. And if you can't see what I'm doing here, like I might look like I'm putting random dots over here and up here, but I'll do it again. Probably should have done this from the first one to show you, but the thing that I'm looking at is this dotted line along here. So when I say low and my cursor's over here, I'm actually looking at this low, but I'm just marking up that dotted line. I will actually do it in this case. I'll click on there, so low to the high, and then to the low. And it actually has the 0.5 here and the 618 here. So I did this one to sort of show how the Fibonacci retracement tool works, but the trend-based one, in my experience, is more valid. So I might change this to orange. And maybe even just mark that it's where's the text? So I'm just going to write in this that it's the trend based. So now the trend based Fibonacci is generally a bit more reactive. So I've written that that's the trend base, that's the normal one. I would actually expect to see reactions more in this zone rather than that zone. If not, you know, we're going to be placing stop losses. So if it does go in this area, we expect a drop, and we place orders and it doesn't work out, that's 100% fine. That's completely fine to be stopped down on orders, because it just means that once it goes up, we're just going to have another opportunity to get a better position. But that's about it. Like, this one's not really that complex. We've just got some pretty straightforward lines, and the zone that would be looking at selling if there is an upwards reaction. Let's have a quick little look. Yep, still continuing to react there. That's good. It seems to have struggled along this 50-day average as well. You can see it's traveled along there. So it's probably a valid reason as to why it hasn't spiked up dramatically. But if it does get past these two moving averages, that's the 50-day and that's the 200, then it should be pretty good. Okay, but yeah, so nice and simple. This is the first time I've charted Ripple. Hopefully it reacts the way that I expect and I get some good trades in the future. But as always, if there's anything that you don't understand, anything that you think that I've done wrong, any questions that you want to ask, please let me know in the comments. I'm not a professional. This is the way that I do it, and it's been pretty successful with some of these trades. I'll do proper trading videos later on to show stop losses and entries and things like that. But in terms of charting, if there's any questions, anything that you think that I can improve on, please let me know in the comments. Like, subscribe, and sort of come join me on the journey. And hopefully I get better at getting the point across than I am now. I'm still a bit funny behind the microphone. But yeah, hope everyone enjoyed it, and I'll see you for the next one, which will be link charting. See ya.